G'day everyone, welcome back to Pete's Investing. Today is June 6th, 2023. This is the Nat Gas price update. On our weekly, we're still in a bearish momentum on our indicator down here. And on the daily, it's broken up into a neutral positioning. So let's go through each of these. First off, on the weekly, our triple moving average of the price chart is in alignment with the moving averages of the CCI 150. And it's giving us a bearish signal, so predominantly bearish trades if you're trading this. And those bearish trades need to align with the daily. And on the daily, you can see there it's broken up into a neutral. So to be extra cautious, I'd wait for this to break down into a bearish momentum before taking any short trades. In terms of direction where it's going, we've got this bullish divergence on the CCI, and that's still working. It's been that way for a number of months now, versus a bearish divergence on the price chart. And the way this works is when we look at the previous high in terms of Fibonacci retracement, and we draw a target range between that level there. So that'll be between a 23% and a 38% retracement if it breaks above this key resistance. This resistance currently, this resistance area is at 27.86, and this minor resistance, if I zoom in, that minor resistance is at 24.23. We've got a key support down here at 21.58. And it's bounced off that in the last few days, and it's making further advancements to the upside. So again, for this divergence to work, we need to see a break above this resistance, and then the initial target area will be this blue area in terms of the Fibonacci retracement level between a 23% and a 38%. And those prices are 325 and 396 respectively. If I zoom out on, this is the daily chart, if I zoom out again, you can see there those divergences worked in the past. Where was it? And they don't always work, but they usually do. And back here, it worked with a bearish divergence on the CCI versus a bullish divergence on the price. It broke below our channel, and it came down and it broke below our closest Fibonacci range down there. In fact, it went as low as almost the 78% at that point. There was another divergence here, another bearish divergence versus a bullish divergence, and that also worked. So that also broke to the downside and below our channel. If I drew the channel there. And currently we're in this current bullish divergence, so no guarantee, of course. There's no guarantees in anything in trading or anything in life, but we're looking at potentially breaking above this resistance and hitting this initial target area. So these divergence doesn't necessarily mean a long-term reversal. It just could mean a little bit of a retracement before breaking down again. If I zoom into this price chart, if I maximize that, again zooming in, you'll notice I've got a long projection if it breaks above that resistance, but also if the price breaks below this support level, we've got this immediate short-term target on the bearish side. So that is between, again, a 23% to the 38% extension of that wider Fibonacci extension range, and those values are 1916 to 1210 respectively, approximately. So that's the daily outlook, and on the hourly. Again, we've got some trading backtesting here, and again, to trade long or short, again, always make sure the weekly and the daily are aligned. Let me pull that back to where it was. You can see there, primarily bearish there, and wait for a bearish signal on the daily, and likewise wait for bearish signals on the hourly if you're going to take any short trades. Now, again, there's no guarantee, but just make sure we don't, primarily if it's going to break below this support, then we're looking at further downside. But in terms of some back testing, using that same approach, the top blue graph up here is the profitability using the long back test, going long only, and this red graph shows the bearish outlook. So you can see there the profitability of both those had you traded that. Now, to avoid those drawdowns, that little drawdown there, you can see there, the price was declining, so the price doubled up and had a bit of a drawdown. And likewise here, when the price is going up, this short positioning was also averaging down. Again, we don't use stop losses, we use the average down approach. And a way to avoid those, you can see there during that upswing, that would have been back here in around March, April 2022. And March, April 22, primarily long trades on the weekly. And March, April 2022, predominantly long trades also on the daily. Avoid short trades because there were no short trades showing on the daily and the weekly. So to understand how to trade this and other trading strategies, reference the links in the description below, and subscribe to my Patreon page, where we also look at answering any subscriber questions there. We also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.